Hello and welcome to Policy Bazaar. I'm Arjun Bhagat. Now, protecting your most important assets is crucial in creating a solid personal financial plan. And insurance policies go a long way in helping you safeguard both your earning power and your possessions. But there are many different kinds of policies and it's important to strategically plan so that every aspect of your life is covered. So today we discuss the 7 most important insurance plans you should look at buying. These include term, personal accident, health and critical illness, and of course child plans, pensions and asset insurance is something that we are going to do in the next episode. But to understand and help us plan them better, we have with us Yashish Dahiya, CEO of Policy Bazaar, also its founder. Welcome to the show, Yashish. Now tell me, what would you consider as the most important policy that one should have? Would you say term is one of the most important policies for your family?
I think the most important thing that we all own is our life. And I think obviously something that protects against loss of life necessarily would become the most critical, most important policy, and that is a basic term plan. The most interesting part about a basic term plan is if a 30-year-old person is looking to get themselves covered with a basic plan for, let's say, 30 years, right? It's going to cost them about 8 to 9,000 rupees, which is about 25 to 30 rupees per day, which is about the same cost as you pay for a toll if you're living in Delhi and you travel to Noida one way. So it's not a very significant amount. You know, when you look at 20-25 rupees, it's not a very significant amount. It's not a big decision. So it shocks me that, you know, people are still not. It's grown about tenfold in the last 4 years, but not even 1% of the insurance policies bought in this country are pure term insurance.
I guess we're still stuck in that mold that, you know, if you invest your money, it should be an insurance policy that gives it back. But, you know, a pure term is something that the insurance premiums are not much, as you're saying, but the rewards are a lot for the family if something does happen to the prime owner.
600-700 rupees per month. I think a lot of people in that earning capability who would be able to get a 1 crore term cover would be spending that on a movie. I think going to a movie today with family is 1,000 rupee affair at least, and maybe more.
Precisely. Yeah.
So how can it be less important than even watching a movie? How can it be less important than paying the toll? I think somewhere we need to wake up and get our priorities right. And I think term insurance is definitely the most critical plan out there, and their costs are very low. Now, that's what you're talking about is the basic term plan. After this starts coming, how do you start thinking about a term plan? Because remember, there are different kinds of term plans. So you can have term plans which give a one-time payout in case of an unfortunate event. There are term plans that create an income stream in case of an unfortunate event. So for some people, an income stream may be better. Maybe a combination of an income stream and a one-time payout is quite preferred by some people. The second thing you would think about is how do you stagger term plans? One doesn't need a term plan throughout their lives, because as one gets older, as the children leave the family, the liabilities reduce. And so one doesn't need to have a term plan. Probably the time when one needs the term plan the most is between 30 to 60. And so having a staggered approach when there is one plan from 30 to 60 and maybe there's another plan with smaller plan which lasts all the way till maybe 70 or so is probably the right way. But I just think more people need to have at least the basic term plan and then start thinking about how they structure the term plan, because it's an important plan. And if an individual loses their life, the family of an earning individual lose their livelihood. And that is something, I cannot overemphasize something of that sort.
All right, so we've got term plan. What about the second one? Would you say it's personal accident?
I would say personal accident plans would come right next to term plans. The reason I say is a personal accident is way lower cost than even a term plan. So it's probably 1/10 the cost or 1/5 the cost of a term plan. However, why are personal accident plans important? So in 2012, about 4 lakh people died of accidents. And remember, a personal accident plan does not only pay in terms of death, it also pays in terms of disability. If one was to look at the data, there'll probably be about 3 to 4 times more disabled people than people who lose their lives because of an accident. And there are different levels of disability. A disabled individual sometimes loses their income, but more than that also needs more care. And that makes that situation quite difficult from a financial perspective. So not thinking about that is a worry. The second piece, the largest reason, about 35% of these deaths happened on the road. But road accidents are not the only thing. We may not hear of them all the time, but accidents happen. The second largest amount of accidents happen by train travel. Then they happen by drowning. And they happen by falling. They happen by electrocution. These accidents lead to death and disability. And personal accident is the cover that covers in all such situations where an accident happens and a disability happens, and road accident is the biggest one. Every 90 seconds, one person is losing their life in the country.
I think we are pretty much leading in terms of statistics as far as number of people being killed, as in India is leading.
Yeah, but that also is because we're one of the largest populations in the world. But yes, that is true. We are the largest accident country in the world. More importantly, again, 60% of the people. So accidents disproportionately happen to the young. So between 25 to 40, 60% of the accidents happen in that age group. Because if you notice, these are the people who are out on the road. These are the people who are, doing stuff on a daily basis, and so accidents happen. So for that age group, 25 to 40, not having a personal accident plan, again, is not a very wise thing. Of course, this is not stuff we think about. Now, the most important part is nobody's going to come and sell this plan to you, because this plan is probably going to cost 2,000 rupees a year. So there's nothing to be made by selling it to you. To a customer, there is no point for any distributor to walk up to you and say, sir, why don't you buy a personal accident plan for 2,000 rupees? Because the distributor is going to make 200 rupees on that, 10%. For 200 rupees, even if you tell somebody come and pick up a check, nobody's going to come and pick up a check from your house.
So what you're saying is that it's crucial to get a personal accident cover.
On your own. On your own.
So
you need to go on the internet, do some research, buy the plan. It's that simple. And nobody's going to come and sell it to you.
Keeping in mind, the urban reality of personal accident. And of course, you talked about other personal accidents that may take place. What about the third plan that one must have?
I think the third most important plan after term and critical illness, after term and personal accident, would be critical illness. So critical illness are all those dreaded diseases which one always hopes don't ever hit anyone.
One would think health.
I think health is very important, but health for people who have got a certain income, sometimes they can take care of the cost, because health is what? A dengue, health is important. It's very.
But you feel number 3 is critical illness.
But critical illness is even more important than health.
Right.
So if you ask me, I would say critical illness is even more important than health, because critical illness is a heart disease, a brain problem, a neurological problem, something to do with the kidneys. All of these, multiple sclerosis, all these diseases which can totally debilitate an individual or a family, if both financially and physically. See, insurance is most important when the frequency of an event is low and the possible impact, financial impact of it is very high.
So that's really the key of what insurance is.
The key of insurance is take it for those events which you cannot handle. So critical illness will be one of those things that an individual may not be able to handle. So third plan would be critical illness. And it's again not as expensive. So when you think about insurance plans are not very expensive. I think if you really thought about it, we hear about it every day. Somebody had a heart disease, and when it happens, it sets people back by multiple lakhs at least. And that is why critical illness covers are very important. A health scare will not set somebody back by a few lakhs. If you see, hospitalization cost is 30,000, 50,000, 70,000. People with decent incomes can take care of that. I think it's the income band of less than 7 lakh rupees that needs to start worrying a lot more about health insurance.
So what you're saying is that critical illness focuses on major medical emergencies that may happen to you,
Absolutely.
Which are going to pretty much bankrupt you if you start getting treated for it.
Yes.
And health cover is something that the costs are not going to be that high, but of course they provide a certain net for the family.
Absolutely. I think health cover.
So let's talk a little bit about health
I think
cover.
Health insurance is according to me the fourth most important policy that any individual must have. Because medical costs are going up. My niece was there, 1.5 hours at a hospital, 6,000 rupees was the cost. Now that is not the cost, that is not the cost one faced 10 years ago. So medical inflation is about 30-40%. On top of that, we all want the best treatment for our near and dear ones. And that can be provided by health insurance. You've got multiple options there, right? One can start creating a fixed deposit which takes care of health scares, or one can buy a health insurance plan which takes care of, But health insurance is about regular medical treatment. Critical illness is different. And I think it's a no-brainer. As the costs are going up, one has to have health insurance. That's something, one of the reasons I'm also pointing out the other three as being most important, because a few more people seem to have bought health insurance than the other three. So health insurance, roughly about 3% of all plans sold in this country are health insurance. About 2.5% of all plans sold in this country are health insurance. So health insurance is starting to pick up. Now, one very important thing, the 4 plans I've just mentioned, in any Western developed society, they will account for about 60% of all personal insurance plans. In India, all of these put together account for about 3% of all plans. So we are hugely underinsured. We as a society need to wake up. Because in the developed world, people will wake up at some age and say, I have to have some planning around insurance and will go and take these plans. But that doesn't happen here somehow.
So Yashish, you're talking about health insurance. Elaborate. What are the different kinds of health insurance that one can look at? What is the age? People like to take a umbrella cover for their families. Does that really make sense? And when does health insurance individually matter more than an umbrella coverage?
So I think one should always take a family coverage for a group which is less than 20 years apart. Mostly if people are above 50, they should take individual covers, not a group in the family cover, because they end up increasing the premium of the rest of the family. And more importantly, if they have a single disease, the premium of the rest of the family can go up unnecessarily, which doesn't need to. If they have an individual plan, then their plan can continue the way it is, and the family plans can continue the way they are. I think family plans are mostly for people under 45, maybe you can stretch it to about 50. After that, people should go individual. Now, in terms of basic plans, you have 3 or 4 kinds of plans. One is your health insurance, standard health insurance. There's a medical, you go into hospital for more than 24 hours, and the costs are reimbursed basis certain terms and conditions. That is a normal health plan. There's something called a super top-up. Now, a super top-up is for those individuals who say, you know what, first 2 lakh rupees of health cost, I'll take care of it. But anything above that, maybe all the way up to 10 lakhs, 20 lakhs, that is what I'm really worried about. So can somebody do that? So these super top-up plans are very low cost, extremely low cost, because a bulk of the medical cost will come below that 2 lakh rupee point. So these super top-up plans can be used very well for the slightly upward mobile. For people having incomes of more than 7 to 10 lakh rupees, they can go for super top-up plans because they are a very low cost way for them to get very high life covers, which can health covers, which can be important to them. Third kind of plan is a hospitalization plan. See, when one goes into hospital, other people come and meet, there are transport costs, there are all kinds of costs that come associated with it. So hospitalization plan takes care of those costs. So you have various things to look at when you look at a health insurance plan. However, in taking a health insurance plan, but one must not forget taking a critical illness plan separately, taking a personal accident plan separately, and having a term insurance as well separately. But those are equally important. They happen very rarely, but if they happen, they can devastate, and they don't happen that rarely. We just discussed 4 lakh people, personal accidents, mostly in that age group of 25 to 40, mostly metro oriented, because again, driving accidents are mostly metro oriented.
We've got Amit from Noida who writes, I bought a new car last year. Within a year, I met with an accident and my car got damaged. The car has gone for scrap, total scrap. The IDV mentioned in the insurance was 4 lakhs 5,000 rupees. However, the company is only giving me 3 lakhs and 80,000 rupees. Yashish, he's asking whether he should go ahead with taking that amount that the company is offering.
I think one has to understand the rules of car insurance. So what happens is your IDV is 4 lakh 5,000. If the car gets stolen, you get.
What does IDV stand for?
IDV is the insured declared value of the car.
Right.
So that is what the insurer and you have agreed is the fair market value of your car on the time of the contract. Basically, that's what it is, right? Fair is what two people agree. So that's what's been agreed. Now, you can increase it, you can decrease it, you can negotiate with the company, you can do all of that. It's feasible, and companies do accommodate that sometimes. But again, once you've agreed, you've agreed. Now, in case the car gets lost, totally lost, you would get the full amount, right? However, if it gets damaged, if it gets scrapped, then there is still a scrap value. The scrap value is all those parts which can be sold. And probably what's happened is the insurance company or the surveyor has assessed that 25,000 rupees worth of spare parts are there. Now, this is an odd thing in insurance, that they expect you to go and sell those spare parts, which personally, if you ask me, I can't speak for the industry, but personally, if you ask me, I think that's an odd practice because the customer is not a scrap dealer. So how does he go and sell his scrap? But usually, if you speak to the person, the garage, they should be able to buy that scrap and give you the 25,000 rupees additionally. So it's the scrap value which has been deducted from your 4 lakh, 5,000, and that's why you're getting 3 lakh 80,000. It's an odd practice, but it is a practice, and it's the way it happens here. So, we've got to live with that.
Right, Yashish. Now we have Dr. Alok Paul who's written to us, and he says, I have a Mediclaim policy of National Insurance for the last 4 years. He says, no problem with the plan or the company, but still I want to have Baroda Health policy of National Insurance in which a single premium gives cashless health cover to a family of 4. Its premium is also less than individual Mediclaim of the same company. He asks if he can port it, if yes, how, or he asks, should I purchase Baroda Healthcare separately parallel to this one? He is 42, his wife is 38, and he has 2 small kids, 11 and 7.
Yeah, so I think he's got an individual health plan, and what he's saying is he wants to give up the individual health plan and take a group health cover. A group health cover is something which is provided to a large group. Group health covers can sometimes be lower cost, but they don't, the future in those is a little less secure in the sense the cost can go up in the future much faster than the individual plans, specifically if the portfolio does not perform, which is, in my view, it's likely to not perform because most of the bank-based group health plans have got a slightly older, especially the public sector bank side, they've got a slightly older skew towards the population, and over time the medical costs of that will go up, and what that implies is in the future the premiums are likely to shoot up. Now, at that stage, in case some complication occurs today you've got no medical complications, which is great. So porting should not be an issue. Although this won't be porting because in this particular case, you're moving from the same company's policy to the same company's policy. So you have a national insurance policy, you're going to a national insurance policy. You're just going from an individual plan to a group plan, which just happens to be cheaper because today National and Baroda have done a deal where they may be providing a lower premium. But please remember, this premium is not guaranteed to stay that low. The premium will be changed every year. You might get a higher premium in the future, specifically if the Baroda Health, the Baroda plan has a group of people who are older and start claiming a lot more than the standard customers of National Health. So I would personally suggest don't get too excited by the 500 rupees or 1,000 rupees you might be saving. I would say stay in the same plan. You've got a plan for life. It's going to last all the way and will go with the the claims experience of the entire population and your personal claim experience rather than the claims experience of a group of the group. So it could become difficult for you in the future if you take a group plan versus an individual plan. And so I would suggest stay with the individual plan. If you do wish to move, it belongs to the same company. You don't even need to port it. Just buy the new plan first. And once you've got the new plan, just stop paying for the old one. You're done.
Right, with that good advice, we've got Lalit Ranjan, who's written to us from Delhi. He says, I have purchased different life insurance plans from many companies. I just want to know, on my death, will my family be able to claim all the amounts from all the companies, or is there an upper limit on the claim?
I think a very important question. In case of death and personal accident policies, so both of these policies is the cumulative benefit that the individual's nominee gets or the nominees get. So in case somebody has 4 plans of 50 lakh rupees each, they would be paid the entire 2 crores. However, this does not work in health insurance. So in health insurance, if you have 2 plans of 5 lakhs each and your total claim is, let's say, 1 lakh, it's not like you can get 1 lakh from one and 1 lakh from the other. The total amount you would get would be either 1 lakh or less of 1 lakh, basis certain terms and conditions, etc. We can get into the detail of that, and we have in the past at times. So health insurance, you don't get cumulative benefits. However, in life insurance and personal accident, the benefit is always cumulative. It does not depend how many companies you have the plan from. Each plan will pay separately, unrelated to the others.
Right, we've got Sanjay from Bhubaneswar. He says, I regularly watch your show and I find it very useful. I have ING Vaishya new fulfilling life whole life plan policy purchased in March 2009 at the age of 18. And the yearly payout is 10,000 rupees. He says, I've submitted 5 premiums till now. He's got back 23,000 after 4 years from the company, and he wants to know whether he should surrender it. He's keen to surrender it, and he asks what the surrender value will be.
Okay, so basic feedback on most plans, and I say about 75 to 80% of all plans out there, especially the traditional ones, is ideally you shouldn't have gotten into it, because these are very low return plans over a very long period of time. Most other financial instruments would beat them. And if you had to, you could have gone into a low cost ULIP, etc. That would have done much better. However, the second rule of thumb is once you're in, then don't try to get out, because actually getting out is very expensive. And more importantly, staying in is financially a wise decision, because on the additional amount you're going to invest, the returns are pretty strong because of the loss you would face from a break-in policy. Now, if you had some financial constraints and you just can't continue the policy, in that case also, don't let the policy lapse or don't surrender the policy. Convert it into a paid-up policy so that you do get the proportional. So most of these plans give you between 2 to maximum 6% returns if you complete the entire policy term. If you break the policy in the middle, you are, you have to be very lucky to get what you invested back. So most of the time you will end up losing money. So if you're buying a 25-year policy, if you don't keep that entire 25-year policy running, you're going to lose money. And if you keep it running for the entire 25 years, then there's a chance you'll make between 2 to 5% return. So ideally, you shouldn't have gotten in, but if you have gotten in, now there's no point exiting, because if you exit, you will lose a whole lot more than by staying in. And whatever additional investments you will make will give you a good return. So if you look at the decision of continuing versus not continuing will have a decent return of about 8 to 10%, because of the fact that if you exit, you're going to lose a whole amount of money. So I'd say stay in, please, if you can afford it. Otherwise, to convert it into a paid-up policy.
Thanks, Ashish. Now, that's all the time that we have on this show, Policy Bazaar. But do write to us at ask.policybazaar.com, or you can tweet us at policybazaar_in. And we'll see you next time. Goodbye. Bye-bye.